Have you ever pondered the true worth of precious metals in our modern economy? From the ancient Egyptians to modern central banks, gold and silver have held an enduring allure. Their intrinsic value lies not just in their rarity, but also in their practical applications in industries like electronics and medicine. As a store of value and a hedge against inflation, these metals play a crucial role in the global economy. Understanding the value of gold and silver can help us anticipate their potential price points in the future. Gold, the eternal symbol of wealth, has more to it than meets the eye. This precious metal has been valued by civilizations for thousands of years, not only for its beauty, but also for its financial stability. Let's delve into the future, analyzing potential price points for gold in the next 5 years. Firstly, we can't discuss gold without talking about inflation. When economies are shaky and inflation is high, gold has historically been a safe haven. It has served as a hedge against the eroding value of currency. With central banks worldwide printing money at unprecedented rates, the inflationary pressure is mounting. This, in turn, could lead to an increase in the price of gold. Next, we have geopolitical uncertainties. These are unpredictable but play a crucial role in gold prices. Political tensions, wars, economic crises, and even pandemics can cause investors to turn to gold as a safe store of value. The unpredictability of these events makes it hard to quantify their impact on gold prices. But history shows us that in times of uncertainty, gold prices often rise. Lastly, let's talk about supply-demand dynamics. Gold mining has been on a steady decline in recent years due to environmental concerns and the depletion of easily accessible reserves. On the other hand, the demand for gold, both for investment and industrial use, continues to grow. This imbalance between supply and demand could lead to higher gold prices in the future. Now, using data from reliable financial sources, we've seen that most experts agree that these factors combined point towards an upward trend in gold prices over the next 5 years. Some even suggest that gold could hit new all-time highs during this period. Keep in mind that while this analysis is based on historical trends and current data, the future is always uncertain. Gold should be a part of a diversified investment portfolio, not the only investment. With these factors in mind, we can make informed predictions about gold's performance in the coming years. Remember, investing in gold is not just about immediate returns. It's about preserving wealth over the long term. Silver, often overshadowed by gold, has its unique place in the precious metals market. Let's delve into the prospective price points for silver in the next 5 years. For starters, it's essential to understand the factors that influence silver prices. Industrial demand is a significant driver as silver is an indispensable component in many industries, from electronics to medicine, solar panels to automotive. The rising technological advancements and green energy initiatives are expected to push this demand even further in the coming years. Investment demand is another crucial factor to consider. Silver, like gold, is often a go-to investment during times of economic uncertainty. Investors flock to precious metals as a store of value and a hedge against inflation. With global economies still reeling from the effects of the pandemic and the threat of inflation looming, investment demand for silver could see a steady rise. Geopolitical factors are the wild cards in this equation. Unforeseen events such as political unrest, trade wars, and global crises can cause sudden spikes or drops in silver prices. Now let's talk numbers. According to a consensus of market analysts from reliable financial sources, silver prices are expected to trend upwards in the next 5 years. The average price per ounce is predicted to rise from the mid-20s in 2023 to the high 30s by 2028. That's a potential increase of around 50%. However, let's remember that these are just projections and the actual prices can be influenced by a multitude of factors, some of which we've discussed earlier. It's a volatile market, and while the potential for profit is enticing, the risk of loss is equally present. Smart investing is not about predicting the future accurately, but understanding the variables that shape it. As we've seen, silver prices are influenced by industrial and investment demand, as well as geopolitical factors. Understanding these variables will help us forecast silver's potential in the near future. To wrap things up, let's revisit the key points we've discussed. We've explored the undeniable value of precious metals, emphasizing on gold and silver. We've delved into the factors that influence their prices, such as supply and demand dynamics, global economic conditions, and investor behavior. And we've projected potential price points for the next 5 years, giving you a sense of what to expect. Armed with this knowledge, you're now better prepared to navigate the intriguing world of precious metals.